Hey everyone, I've identified 3 spectacular artificial intelligence stocks you can buy today and hold for the very long term. Now, these 3 AI stocks I'm going to mention are not going to surprise hardly anyone. However, this is an excellent way for long-term investors to buy AI stocks with innovative technology to benefit from the rising effectiveness of AI without taking excessive risk in investing in unproven companies. So without further ado, let's take a look at what these 3 excellent AI stocks are and why I like them so much.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so the 3 AI stocks I'm recommending in this video are Alphabet, Microsoft, and NVDA. These 3 companies are all benefiting from the rising effectiveness of artificial intelligence, and arguably you can say NVIDIA is benefiting the most. However, they're all going to benefit, so even if NVIDIA benefits more than the other two, it's still going to benefit all of these companies as Microsoft and Alphabet are buying NVIDIA's products and benefiting from NVIDIA's products as well. You'll notice that over the last decade, they've all done a great job of increasing their revenue, starting with Alphabet, which generated $328 billion in revenue, which was up from around $80 billion in revenue in 2015. So Alphabet has quadrupled its annual revenues in the last decade. Microsoft likewise increased its revenue to $245 billion in the most recent trailing 12-month period. That's up from less than $100 billion in 2015. Finally, Nvidia's revenue has exploded in the last year and a half, up to $79.77 billion in the most recent trailing 12-month period. And if Nvidia's growth expectations come to fruition, I wouldn't be surprised if Nvidia's annual revenue surpasses Alphabet and Microsoft over the next decade because of how quickly NVIDIA is growing and how quickly the AI market is growing, and the new and developing use cases for NVIDIA's GPUs are proving to be very lucrative. These 3 companies have not only grown their revenue, but they're growing revenue effectively, efficiently. I'm not so impressed with companies that are growing revenue and losing money on the bottom line, or growing revenue by investing significant sums of capital in order to generate that revenue growth. Consider this example. What's more impressive? An entrepreneur that's generating $100,000 in revenue from one restaurant location, or an entrepreneur that's generating $100,000 in revenue from 10 restaurant locations? The one with one location, right? Because it's generating more revenue from just one location, getting the most out of that one location. So their growth prospects are much better because when they open that second location, and if they open 10 locations, they're more likely to have significantly more revenue. That's the concept behind return on invested capital. It measures how much profit a company generates in relation to how much capital it invests. It holds companies accountable for utilizing investor funds effectively. Speaking of which, NVIDIA at 93.75% in return on invested capital has demonstrated phenomenal stewardship of investor capital. Alphabet and Microsoft at 29% each respectively have also done a great job of investing investor capital. They know where to allocate their funds. They know how to spend money on research and development. They know what kind of talent they need to hire to generate sufficient profitability for the money they use. Each of these 3 companies also has excellent expectations for earnings growth over the next 5 years. For Alphabet, the analysts on Wall Street that are following this company expect it will grow its earnings per share by 20% per year over the next 5 years. Now that's roughly twice the rate of growth of the average company in the S&P 500. So Alphabet will be growing 2x that of the S&P 500 in terms of earnings per share growth. Microsoft, meanwhile, is expected to grow its earnings per share by 14.6% over the next 5 years. Not as strong as Alphabet, but still ahead of the average company in the S&P 500, which is impressive considering Microsoft's size and scale. And finally, NVIDIA's expectations for the next 5 years are for earnings per share growth of 46.35% each year for the next 5 years. That's almost 4 times that of the S&P 500. That's why you remember I said I wouldn't be surprised if NVIDIA surpasses Microsoft and Alphabet in terms of revenue and profit over the next 5 years. The company's growth is exceptional and it doesn't seem to be slowing down. The products it's launching are sold out and people are lining up to get their products. And given the rising effectiveness of artificial intelligence and how much better NVIDIA's AI accelerators are compared to the competition, I wouldn't be surprised if this continues for NVIDIA for at least the next 12 to 24 months. And maybe after 24 months, there might be some competitor that can encroach upon NVIDIA's estimated 80% market share in the AI data center GPU space. And the last reason why I like these excellent AI stocks is because they're not expensive, right? I can share with you the most beautiful car with the most luxurious features, and then when I come to the price and tell you this car is selling at $175,000, you're not going to be so impressed. You're going to say that's out of reach. That's not something that I can afford. But these three AI stocks I just highlighted with all their excellent characteristics are not selling at an expensive valuation. Alphabet, Microsoft, NVIDIA, starting with Alphabet, it's only trading at a forward price to earnings of 18.53. That's about the price of the average stock in the S&P 500. In fact, slightly below the average price of the average stock. So you're getting Alphabet stock at a bargain, even though it's a phenomenal company. Microsoft is a little bit more expensive, but still not that much in terms of overall price to earnings ratio. It's trading at a forward price to earnings of 27.21. Still a good value for long-term investors, comparing Microsoft with many of the other investments you can possibly buy. Microsoft, with its characteristics, with its lower risk profile, with its dominant share of its end markets, makes an excellent investment for those looking to capitalize on the rising effectiveness of AI. And finally, NVIDIA is trading at a forward PE ratio of 31.38. When you look at NVIDIA's forward PE ratio, it really puts into perspective the company's excellent performance. When you just look at NVIDIA's market price, you might think, well, the stock price has moved up too much already and I'm too late to this party. It's too late for me to buy NVIDIA stock. And you might come to that conclusion if you only look at the market price. But if you look at the price to earnings ratio, what you're getting in return for the price you're paying, NVIDIA stock is not that expensive because it's giving you so much more today than it was giving you 12 months ago, than it was giving you 24 months ago, because the company's profits are so much higher, its cash flow is so much greater, and its revenue base is that much larger, and its technology advancements have given its lead that much more given its competition. So for all those reasons, NVIDIA stock is not expensive either. So for all the reasons I just highlighted, these are three spectacular AI stocks you can buy today and hold essentially forever. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.